Hey, happy Thursday, and welcome to another episode of Kenny and Danthika Talks. Last week we talked about down payment, and we found out you do not need 20% for a down payment. But we had one question come in from a viewer, and they asked, well, outside of down payment, are there any other costs I should be aware of when buying my first house? Very easy, and thank you for asking. I'll let Danthika take this one over. Danthika?
Thanks, Kenny. That's a great subject to talk about. So, typically, when a buyer comes to me and they want to purchase a house, even before we jump into the car, which I know is the tempting thing to do, we sit down for about an hour and we talk about what are the costs that they will incur when they start this process. So, one of the first things that you're going to need is something called the earnest money deposit, which some states also call the good faith deposit. What is this? This is money. This is a check that you will write to the brokerage or the attorney who will hold this money till the transaction is over, basically telling the seller just how earnest you are about pursuing his house. So, if everything goes well and we meet all contingencies and we get to the closing table, this money will be given as a credit to you on the closing disclosures and will be part of the money that you will have to bring to closing. So let's say for some unfortunate reason you are not able to go through with the transaction after all the contingencies have been met. Let's say you had a last minute something come up in your finances and you were refused a loan. This money goes to the seller for taking the house off the market. So how much earnest money should you really have? Typically, the rule is 1% of the price of the house. So if you're buying a $200,000 house, you should be able to have some sort of liquid cash in your account to write a check for $2,000 to either the attorney who will be holding it or the broker who will be holding the earnest money. So now you will ask, I'm getting a 100% financed house through a USDA loan or maybe through a VA loan. Do I still need to write an earnest money check? Yes, you do. You don't have to, but it's always a good idea. And in this competitive market, writing a check of 1 or even 2% will tell the seller just how competitive and how serious you are about buying his house. All right, so the next check that you're going to have to write is a check for the inspector, and that would be the home inspector. Now, you can always buy a house without getting a home inspection, but that is never a good idea. Imagine buying something and not spending the money for a home inspection, and then you close, and 2 weeks later you find that you have $10,000 worth of repairs that could have been avoided if you had done a home inspection, and maybe we could have even asked the seller to give us a credit or do those repairs. Not getting a home inspection is never a good idea. So how much do home inspections cost? Well, typically they start off around $450. In Georgia, the bigger the house, the more you will pay. And this is just for a basic home inspection. If you buy a house with a basement, you might want to consider doing a radon inspection. That'll add about another $100 to your home inspecting tab. Then if you have a house with a pool, you want to maybe get a pool inspector to come check it out. And you also, let's say you have a house with a septic system. This is a big one. You must get a septic clearance letter. And basically what this means is that a company that is authorized to check septic tanks will come in, dig the yard a little bit and check out that septic system and make sure that it is working all right. Because trust me, nobody wants messy poo-poo backed up 2 weeks after you close. Now that will probably cost about another $450. So we are already at about, I would say about $800 for your inspections if you have a home with a septic system. Other thing that you have to budget for is a termite letter. Most inspectors will give you a free termite letter, but in the event that they don't, a termite letter will cost you about $60. Believe me, this is an investment that is well worth the money spent. We live in Georgia. It's not a question of if you have termites, it's a question of when you have termites. And you really don't want to get termites in your house because they can cause a lot of damage. Here's some good news for VA buyers. The VA requires you to get a termite letter, and it also requires the seller to pay for that termite letter. So if you're a VA buyer, you're in luck. You save $60, the seller gives you that termite letter. All right, one final cost before you get to the closing table, and that is the cost of the appraisal. Once we get through the contingencies, your lender will order an appraisal, and that has to be paid upfront. Typically, appraisals will cost around $450. However, with the competitive market and multiple offers, we find that a lot of people are writing appraisal contingencies of maybe 14 days. And what this does is you're probably going to have to pay a rush fee of about $150 to a seller to get that appraisal in on time. So there you have it. Make sure you have about an additional $2,000 just to be safe before we start going for that house, because once you find your dream house, you want to be able to make sure that you can write out those checks and get all these things together before we get you to the closing table.
Thanks, Danthika. So these are a couple of costs you can expect to pay before you get to the closing table, but once you get to closing, there's something else you should definitely be aware of, and it's called closing costs. Now, closing costs is going to include a couple of miscellaneous things like lender fees, attorney fees, tax and title, among other things, but a big portion of your closing costs is going to be your lender fee. That's why it's very important when you're shopping around for a mortgage, you know what that lender is charging. I say our fee loudly and proudly because I know how competitive we are. We charge $11.95 for underwriting, processing, and loan origination. All that together, $11.95. Flat rate, doesn't matter how much you borrow. We're not percentage based like a lot of our competitors where they charge, let's say, 1% origination. So let's say you have a $250,000 mortgage. 1% is $2,500. That's already double, more than double us. But let's say you wanted a more expensive house, $300,000, $400,000, $500,000 loan, $5,000, where we're still over here at $11.95. So in this market where the buyer is generally paying all of their closing costs, it's very important you keep your closing costs low by having a lender with low fees. I can help you. Call Kenny with Movement Mortgage for all your financing needs. And I look forward to seeing you next week on Thursday for another episode.